Yo, welcome back, guys. So I hope you had a nice afternoon. Yeah, me too. Had a nice one. So yeah, gold. Our sales are going according to our way. I remember the entry was on this volume imbalance, the daily volume imbalance. Let me go back one time and show you, remind you where that level was. Okay. So this is that level, the volume imbalance up here. Okay. Between this candle, this next, we have some volume imbalance right there. And you can see yesterday's candle ran just into that, then we reversed. So our optimal trade entry was up here. So immediately this candle was running into that volume imbalance, we got triggered at the volume imbalance low. Okay, so we placed our orders at the volume imbalance low, and stop loss was just above the volume imbalance high, which was at the opening price of this bearish candle. Okay, so yeah, the bears are in. We are forming that high, that swing high. Okay, so we start seeing some bearish order flow from up here. Okay, that's why we took our shots up here. So also remember, this is that -1 standard deviation. This is that -1.5 standard deviation reversal area. This is that middle point of the standard deviation, then -1 and -1.5 standard deviation. So the cells came from this volume imbalance, okay? That's why we took ourselves up here. All right, so I remember we also had 15 minutes order block. So into 4 hour, so nothing really, nothing in here. So nothing that could have offered me sales except that daily volume imbalance. So we got our entries precisely at the week. So yesterday's high, that's where we got our entries right there. Right, so the volume imbalance is what now? High probability PD array. So never ignore a volume imbalance, okay? So I know people are buying all this run up here. They knew that they were going to get burnt because this volume imbalance was the last line of defense. So sales right there on that week, and stop loss above the daily, the bearish, that bearish daily candle, the opening price of that bearish candle, which is just above the volume imbalance. So even if the market decided to cover all that volume imbalance, then it was still good. Okay, so that volume imbalance started overing sales from up here. Another one, the next one during, what was this NFP? This is Tuesday. So this also was during CPI release. Okay. Then again yesterday, visit into that. All right. Then we drop. So I remember we have 15 minutes bearish order block, which was revisited with this candle right here. This is also a mitigation block right here. So we are ready to go for sales. And as for our first target is at 2050. 0.58, that's our previous day low. We can also target the -1 standard deviation, -1, standard deviation right here. So these are our two TP levels down here, okay? All right, so any rallies, as you can see, these are fake moves, okay? All right, into 30 minutes, do you have something? Not really. So overall, the order flow is bearish, so we maintain the bearish order flow, okay? Plus we have some institutional sponsorship behind us, the COT data, remember? Yeah, so these guys, the street money can keep buying. we keep selling. So see who is winning. Yeah. All right. So we maintain the bearish order flow. So overall, we are targeting 2050 for today. Okay. But you can swing because from this volume imbalance, now price will take some time before coming up here. Can take weeks, even a month plus. Okay. So 5 minutes. What do we have here? All right. Again, see we have maintained below the midnight opening price throughout the day. This indicates to me that gold is heavily short, heavily short. So heavily short. All right, so we swept some buy side liquidity, relative equal highs, right there. Then this is the displacement in New York. So in displacement, we have this fair value gap up here. So for a day trade, someone can get their sales from this right here. This gap is going to push us even lower. And that gap is at that middle point between the negative 1.5 and -1 standard deviation. So high probability fair value gap. So right there, now let's tape read. So run into this, then go short. Yeah, so keep watching for this. Our market is coming for this inefficiency, then a drop lower. Okay. Otherwise, keep swinging those trades. Yeah, we might get some good returns of those sales. It's a good swing trade from that volume balance up there going lower. Okay, keep swinging those. Right there, right there, right there, right there. So back into that follow me balance, expect some heavy shots, rejection of there, then we go down. Also this candle is the bearish order block. This candle, see this candle, this is the bearish order block. Mm. So we have a bearish order block plus a fair value gap. Every rejection of that level right there. For the target, previous day low down there. So if I was day trading this, because I'm swinging this, if I was going to day trade this, I would be getting sales from this, from this fair value gap and this bearish order block. So I expect the bearish order flow to kick in to proceed from here. From this, the fair value gap, the bearish fair value gap, and the bearish order block. So all these bullish candles, this is a fake move, okay? Anybody buying, they're in the wrong side of the market. So go short up here. So this drop is the displacement market structure shift in New York Q zone though. So in New York, market structure shift, then a retracement into the premium arrays, which are bearish order block and bearish fair value gap right there. And we can go short, can proceed the bearish order flow. So any rallies, it's a fake move, okay? The real order flow is bearish. So expect bearish candles. So any candles going against your order flow, those are fake moves in price, okay? Again, discount premium. So premium from 50% going up. In premium, what do we have? Fair value gap, bearish order block, 62% optimal trade entry. So if I didn't have those sales from yesterday, then I would be getting short in this fair value gap and in this bearish order block. And my stop loss would be up here. Okay. See this swing. This is where I would place my stop loss for that day trade. Okay. So premium, any rallies you see going into premium from 50% going up, those are fake rallies. Okay. So I'm watching to see how this candle closes. Will it close below this candle? If it did, then this candle will be the next bearish order block. All right, so that candle now it's a bearish order block. This candle is the next bearish order block. Right there. So from here, I'm watching below here for a sell side liquidity sweep. Watching below this candle. This, oh damn. I'm watching below this candle for sell side. So this is a short-term sell side liquidity right here. This short-term sell side liquidity. So short-term sell side liquidity. So do you see the hierarchy of PDRAs? Displacement, return to premium. In premium, we have premium arrays. These are we have a value gap, the bearish order block, drop. A close below this candle makes this a CISD, a change in a state of delivery. So this is the bearish order block, this one. Revisit, then drop. So now we are looking down here for the short-term sell liquidity sweep. Okay. Right there, we've just swept the short-term sell side liquidity, and we don't just sweep it. I want to see it sweep and go below it, because overall we are targeting that previous day low sell side liquidity pool. So that's where we are aiming for. So this was just a short-term liquidity. So if you got your cells up here, okay, stop loss is up here. For a scalp, you can target this sell side liquidity, short-term sell side liquidity. So you get your entry there, stop loss above the swing high. Then for the target, you target this short-term sell side liquidity pool right there. Okay. So your TP should have been hit if you are scalping, and it should have taken how many minutes? A return into this from up here, then drop, then this should have been 5, 10, 15, the 20th minute candle, the 5 minutes candle. So around not even 20 minutes, because we have 3 minutes to around 17 minutes. That's a scalp of 17 minutes. So entry, short-term liquidity, exit. That's scalping, but I'm teaching you day trading and swing trading. Okay. Example, that trade from yesterday, we are going to swing it. Okay. For day trade, we could have gotten sales from up here, going to that previous day low liquidity pool down there. So after sell liquidity sweep, you expect some form of rejection. Okay. So gold loves liquidity. So you can see the rejection of this short-term sell side liquidity right there. Back into our premium arrays. We have the bearish order block right here. So might get revisited after we swept sell side liquidity right here. And again, all these bullish candles, they are against the order flow. The order flow is bearish. So this bullish candle, we see them as fake moves. Okay. And this one has come from sweeping the sell side liquidity right here. So we sweep sell side, expect some form of rejection. Okay. So I'm watching a revisit into this bearish order block. Then the next time frame will be time window. Will be the silver bullet. And the silver bullet in gold really gives nice moves. Yeah, nice moves. So from here into silver bullet, you'll get some nice moves. Okay. Right, so I'm watching to see how this candle closes. Okay. The current candle, how it closes. So if it closes below this current bullish candle, this should be the next bearish order block. Only when it closes below precisely the opening price of this, right? Hey, the 10 a.m. is, sorry, I projected wrongly. 10 a.m. is right there. I was wondering what's going on. Yeah, right there. Yeah, 10 a.m. So currently I'm seeing a volume imbalance forming. See this candle, next one right there. You have a gap which is filled by just wicks. Okay. But we can't really tell until a candle closes. That's what I keep on telling you. Until a candle closes, you can't get full information. So you must wait for a full candle close before getting full information. Okay. Yeah. So let's watch how this candle closes. If it closes lower, then it leaves a volume imbalance which should be revisited before dropping even lower. So I'm watching this area and I'm also watching this current candle, how it crosses, okay? Right now we have a volume imbalance right there. Watch how that candle reacts of that volume imbalance. A tap into that should give us heavy sales, okay? That's the volume imbalance. Watch how the next candle reacts of there. Volume imbalance, abbreviated as VI. Right, so that's a very strong PDRA in price. We should get some heavy shots from here. The same way we had some heavy shots from yesterday, the daily volume imbalance up there, where we got ourselves from up there. So same scenario. So the price is fractal. So These elements, you see them in higher time frame. You will also see them in lower time frame. So this will act as a strong draw on price, like a magnet. Price will come here like a magnet, and then we'll get heavy shots from here. So follow me balance, okay? I'm also watching to see how the next candle closes. I want to see a clear close below this candle to make it a bearish order block. So right there, filled. I expect some rejection up there. Okay, so price closed within that volume balance. Let's see how it reacts. The next candle. Now I'm watching the next candle to see how it closes also. Okay, but expect some reactions of this volume imbalance. Okay. So you can see how price is just going up and down from this volume imbalance. So until this candle closes, you don't have enough information, okay? Right. So we closed within the imbalance, and now we are entering the silver bullet time window. Right now, from here, from 10 to 11, right there. So this imbalance is still holding price. So you can see the reaction of this volume imbalance, yeah. By this candle, the next one, the current forming into silver bullet. So I'm looking at this bearish order block and also looking to see how that candle closes. All right, so across above it, we can use it as an inversion to set us to premium before proceeding lower. All right, so I'm watching to see how that candle closes. Also, I'm also watching out that candle closes. This currently is an inversion, volume balance inversion level. So I'm watching up here. Unless we close below it, okay. Otherwise, it's an inversion, should set us to premium before proceeding lower. Again, we're in that savable time window, so we expect fresh setups, okay. All right, so we closed below it, and now it's an inversion for lower to set price lower. Okay, before it was an inversion, yeah, immediately we closed above it, set us to premium. Now because we have closed below it, now it's an inversion for lower prices. Okay, so I'm seeing this candle. It's a bearish order block. Okay, this candle. So just don't want to draw too many lines in here, but just know that this candle is the bearish order block. Is an inversion to set price lower. So why did we classify this candle as a bearish order block? Immediately this candle closed below the opening price of this candle. Now that's a change in a state of delivery, CISD. And now this is a bearish order block. And this is an inversion to set price lower. Overall, it is supposed to set price lower, yeah, because we're in a bearish order flow. Now this volume imbalance, it's a premium array, should set price lower. Okay. Right. So next, this is the next short-term CSI liquidity down here. This is the next short-term CSI liquidity right there. So I'm looking down here, okay? For this short-term liquidity pool down here. So all this while I'm looking down here, okay? I'm not interested in any candles running up. Those are fake moves right here. right there. So sell liquidity, short-term sell liquidity engaged right there. So, and I said expect some reactions when a liquidity pool is traded into. So that reaction is after trading into a sell side liquidity pool. So I usually expect some form of reaction. Okay. And when it's on higher time frame liquidity pool, now that's a good setup. Okay. Let's say a daily time frame liquidity pool. That should have been a long for me. Should have bought down there. But overall, the order flow is bearish. So this is a lower time frame, short term sell side liquidity. So we can't buy there. So we are with the bearish order flow, and we expect that previous day low liquidity pool to be our main target. It's at 2050, if I can remember correctly. So looking up into premium, what do we have? We have this volume balance. What else? Bearish order block. This candle. Okay. So you might trade into that, then drop. We don't see. I don't see any inefficiency along the way. Don't see any fair value gap. So the market is efficient. So this levels up here. So I'm watching to see how this candle closes and the next one. So this 5 minutes candle, how it closes, and the next 5 minute candle, how it closes. Back into the premium array, volume imbalance right there. So also I'm watching to see how this candle closes. Right, so I'm also watching the swing high here for possible buy side liquidity sweep for further drop. So I'm watching the bearish order block and that swing high right there. Or also that will be a short-term buy side liquidity. Okay. So I'm watching to see if price will sweep this short-term buy side liquidity pool into this bearish order block, then proceed lower. So now currently this fair value gap, sorry, the volume imbalance can be used as inversion. Okay. So, but overall, I'm with the bearish order flow. So even a sweep above that buy side liquidity pool, the short-term buy side liquidity pool, I see it as a short. Same way that we had a sweep below here, then a retracement. And I said that if it was an higher time frame liquidity sweep, like a daily or a weekly time frame liquidity sweep like this, I'll be buying down here. This should be the first day, second day, 3 days long. So the market is fractal. This same concept, apply them in the higher time frame. Okay. Especially gold, because gold really loves liquidity. So currently I'm watching to see how this candle crosses. Will it form, will it close bearish, and the next candle also crosses bearish, then this fair value gap will be to this candle and the next. But if we form another, we will have a balanced price range right there. So let's see, let's see how that candle crosses though. Mm. Oh yeah, and so this candle currently, this bullish candle is the bearish order block. So you don't want to draw so many lines in here, but yeah, this is the bearish order block. Immediately it was traded through by this candle. Now this is the bearish order block. Also, I'm also cautious that the market might come for this buy side, tap into the bearish order block before dropping. But this, the volume imbalance should give us some form of resistance plus this bearish order block right here. It's like header tap into that bearish order block. Let me just do it. Actually, no need of ignoring anything. So yeah, we had a revisit into this bearish order block right here. This candle right there. And the revisit into that bearish order block. Let me also extend the volume imbalance. Oh yeah, and also the next short-term sales side liquidity is down right here. Right. So currently market is sticky, and just want to see how the market trades off these levels. Okay. Otherwise, this is the short-term sales liquidity. I would want the market to trade into this, but I'm also cautious that the market might come for buy side liquidity up here. Short-term buy side liquidity into this bearish order block before dropping heavy. So right here, I feel like the short-term sell liquidity is more likely to be traded into. Yeah, so I feel like the short-term sell liquidity is more likely to be traded into. So sticky press action. So I don't like this kind of press action, but it must be like whatever the market draws at you. I'll be ready for it. Okay. So we are past the silver bullet currently. So we are into this next time window, 11 to 12, the London cruise. We call it the London cruise. Actually, London cruise is at 12 New York local time. So we can extend for some minutes, then call it a day. So 12 New York local time, that's the London close. So that's when also you should close most of your positions, okay? As a day trader. Yeah, so do you see how I use my levels? I use and reuse them. Use and reuse them. Don't just use them once and I forget about them. I use and reuse them. Okay. So this is just a consolidation before an expansion. Okay. So and I said I'm more favoring SSI liquidity to be swept because we are overall in a bearish order flow. So I'm favoring sell side to be swept. But if we run for buy side, also I expect an expansion lower to attack sell side liquidity. Overall, I'm favoring sell side liquidity. So I'm favoring sell side liquidity. This is what I'm favoring. Okay. So I usually don't like this kind of price action. So muddy price action. Yeah, I love the we call this high resistance liquidity runs. Okay, this is a high resistance liquidity run. So it's where usually we have muddy price action, as you can see right here. So I love those low resistance liquidity runs where we get to our points real quick. So this is high resistance liquidity run environment. I usually don't like this. So I love the low resistance, uh, low resistance liquidity runs. Okay. So in low resistance liquidity runs, we should have already hit that previous day low liquidity pool, the target. Okay. This is high resistance liquidity run environment. So expect some mad price action like what we are seeing currently. Okay. So it's all about being like water. Whatever the markets draw at you, be ready to fold to it. Okay. Be ready to, yeah, be ready to roar to its, fold to its rules. Yeah. So, yeah, don't try to be Rambo in this kind of market environments. Okay. Just stay cool, mark your PDRAs, mark your dealing ranges. Like example, currently we're in this dealing range between this short-term buy-side liquidity and short-term sell-side liquidity. That's the current dealing range. That's the current market dealing range. Okay, yeah. So short-term, I mean dealing range high, dealing range low. So yeah, run into premium arrays, a bearish order block, volume balance, shift, bearish order block, return to a volume balance again. And it's a sticky, it's a mad depress action. So this is high resistance liquidity runs. Okay. So expect such. So not every day the market will give you those huge runs straightforward, straight away. Some days it's like this. Yeah, it's like this. high resistance, liquidity run, sticky market, muddy price action. Oh, sorry for that. And right there, we have our short-term liquidity pool traded into. And right here, I wish to end this session right there. So gold will proceed dropping lower with the muddy price action, as you can see currently. But eventually, we will get to our target down there, which is the previous day low. Right, so that, guys, I wish to end this session right here and call it a day. We meet again tomorrow. So keep holding those sales from that daily volume imbalance up there, and we run it as a swing, because overall now with the institution order flow behind us, then this thing is going to drop lower. Okay, so the COT data, the towards I'm forgetting that name now. Open interest, yeah, the open interest plus the COT data. Now that gives us heavy sales in this instrument. So institutional sponsorship is behind us. So yeah, we are good. We are good. All right, and at that, I wish to end this session. Wish you a nice evening. We meet again tomorrow, same place. We do this again tomorrow. So yeah, have a wonderful evening. Bless. Yes, you're welcome. You're welcome. Have a wonderful evening. See you tomorrow, same place. Bless.